Hey guys, what's going on? Welcome back to another weekly forecast. So last week we did have a forecast that price should start turning around, and we did. However, price did extend for 3 days at the start of the week, so it did extend its bearish push, which wasn't expected. But I did update the free channel as much as I can. So well done if you did capitalize on that. You can see that price was following, just for visual representation, it was following this trend line where it was making lower lows and low highs each time and continued its push to the downside. Well done if you guys capitalized upon that bearish move. But what ended up happening is that price ended up coming back towards this significant area around about 1920. You can see price slow down here. We then had FOMC, which you can see that price went for a little stop hunt back down to the previous supply zone around about 1900. This was a good area to start getting in some buys. Price tagged 1896. It went pretty low just for extra liquidity collection, reversed back up and came back within the range. Now, going into next week, I am expecting for price to continue this area, continue this push to the upside, but it may not be a swift move. What this would be is that price is within this range, right? You can see it's back within this consolidation area. Price could chill around for the start of the week, could start pulling back towards this imbalance area around about 1910. Around this area, I'll be looking to place some buys. Stop losses below this 1895 area, because that will be my invalidation area, just because it's a significant wick which is left from FOMC, which we want to keep intact for some bullish moves, and we want to start getting some higher highs, higher lows to continue its uptrend. So if price starts pushing back down towards this imbalance, I'll be looking for a reversal, some extra confirmations here to see price push back up to this 1950 resistance area. And then we'd like to see how price action develops at this area, because it's pretty hard to kind of predict what will actually happen, in the following week when we don't have that data. And that's what happened. If I drop down to the hourly, that's what happened last week. You can see that on the 14th, which is the Monday of last week, price was actually consolidating within this area. And then I expected some sort of, reversal pattern, but what ended up happening is we pushed back down to this support at 1958, right over here. And then we continued making lower prices just like that. So at this zone, what you want to do is you want to follow the trend. You can't really pick the bottom and you can't really pick the top when it comes to gold. It's just like betting on the underdog. You never actually know what would happen. So you have to just follow the favorite. And the favorite at the moment was the bears, until it got to a certain area where price was just pushing all the way back down just for a FOMC discount price. And then they ended up getting in, price started pushing up. Going into next week, I'll be expecting for price to push back down here, like so, back towards this imbalance area to push up towards 1950. Because the fundamentals are the same, inflation is still at large, and there is some uncertainty still with the war between Russia and Ukraine. Okay, so because price is pretty low, I'll be expecting for price to push to this 1950 area. If you can see some sort of bullish price action still developing around this area, we could expect some sort of retracement for it to actually break this 1950 area here. Now, then this will be the new support for it to continue up. So these are the confirmations I'll be looking for. Remember, gold will not just move in one solid candle to the upside. We need to kind of follow the trend and see if there's confirmations. So that's pretty much it for that forecast. You can see that I'm expecting bullish price action to occur. It may stay within this consolidative area where price could just range within this area before making its push to the upside. But I'm still expecting bullish price action. Now, time to talk about the invalidation area and if this forecast, flips on its head, what to do. So 1895 was the spike low from the FOMC. Now, since we are showing bearish moves on the hourly and the 4-hourly here, if price does break back, I'm sure we should have some sort of bullish reaction here. If price pushes up and stays below, against this resistance, and we have a resistance around about 1930, and price pushes back down to the support, we could start seeing price break this area to use it as a support to continue lower. Now, we have to consider both scenarios, because when it comes to trading, we actually don't know exactly what will happen. Gold could have an extended pullback right down to around about 1830, 1828 before it starts pushing up again. But I don't want you guys obviously to kind of get fixated on longs. We want to get confirmation first before you start going in. I know we had a lot of people on Friday who were looking to hold positions for long term. And this is at this area. So I remember having my limits around about 1841, which never got tagged, as you can see when I shared it on the free channel. Price did end up pushing down here, and then we had a lot of people buying around this area, 1820. So well done to those guys who got the quick scalp buy. It was around about 100 pip move back to the upside, which then came back into another sell zone of mine. I wasn't on the charts, so I didn't manage to catch it, but a few people did. Price then pulled all the way back down. So the people who are holding buys here actually did end up getting stopped out that day at break even. So you guys got to keep collecting profits. Remember, it was a Friday. You wouldn't expect some sort of big move to occur if there's no news events, unless a significant area was touched. For me, significant area would be around about 1910 to 1905, just because we've got some imbalance around this area and it matches with my strategy and my buy zone. So that's why I'm still waiting, still trying to get in at low as possible. I always say this countless number of times that people in my VIP understand about patience. And if you get in as high as possible for sells and low as possible for buys, your risk to reward ratio is always good, because your stop loss can go above the previous high, but you've entered as high as possible, right? There will be much more reward for you as a take profit level, because you've got much more distance. Now, if your stop loss gets hit, it doesn't matter, because it's a smaller, tighter stop loss. See, you don't want to be buying within this area, right? Because it's not as low as possible, right? And price did end up pushing 100 pips to the downside. Your stop loss would have to be here. And that's a huge stop loss for like a target, which, might not end up even being achieved. So take that as a kind of cheeky nugget. I do share this all the time on my VIP, so be sure to check that out. Links are in the description. Yeah, but that's pretty much it. So I'm expecting for maybe my price could even on Monday start pushing up, but we'll still always wait for some sort of retracement to get in to continue. But I will be looking at this area below 1910 as a key point of interest, you could say, to see what sort of reaction to get, and to get some nice buys. Because if you could get in at around about 1905, this might be, I guess you could take it as a free signal. It is a support level, as you can see, which was held previously, and you'd end up having a tighter stop loss, where my invalidation area is here. Well, obviously it's 100 pips just because it's a higher time frame, but I'm sure if you drop on the lower time frame, you'll be able to squeeze this stop loss up depending on timing and price delivery. So yeah, pretty much it. Be expecting bullish price action going forward. And yeah, that's all for the forecast. Links are in the description if you want to get access to VIP and learn my strategy. But yeah, it's been Elite Empire FX. Peace out.